My name's Sara Compton. Like Angela said, I am a business attorney. My practice is in Carlsbad, and I focus solely on servicing small to medium businesses. So people just like yourselves who are starting out, starting new with a new business. And so what I've done is I have prepared a handout for you. And if there are not enough handouts for the attendees, then just, Angela can email me and I can email her the handout, or I can get her some. So what I'm going to talk to you about today is entity formation and choices of entity. So you all are going to be preparing to start a new business, as I understand it. And so congratulations, that's really exciting. When you first start a new business, you're full of ideas and possibilities seem limitless and endless, and there's a lot of choices to make. And one of the most important choices a business owner can make is what form of business. And as you'll see on the handout, there are several different choices to make. So what I'm going to do is just briefly outline the different choices and give you kind of a broad brush overview of the differences between them, and you may be able to come away today hopefully with a better understanding of what choice would be right for you. So the first entity choice is a sole proprietorship. This is the easiest entity choice. This is basically an individual, yourself, starting a business, opening shop, and practicing. There's no formalities. There's no requirements. There's no anything to file with the state, and it's just a single person doing business. A lot of times, people will do a business as a sole proprietorship as a DBA, and what this means is it's themselves, but they're doing business as a different name. And in order to do that, you just have to file record something with the county recorder in the county in which you're located, in your case, San Diego County, and the recorded form is published in a newspaper, and you've obtained your DBA. Now, the DBA itself can't have any sort of word that gives people the impression that it would be a corporation, like you couldn't end in Inc. or Co. or something like that, because that would mislead people into thinking that your sole proprietorship is a corporation. The DBA doesn't give the sole proprietor exclusivity to the name, meaning if you name your practice Best Acupuncture, then it doesn't give you rights to the name. You would want to make sure that the name is not being used by somebody else, not because necessarily they have rights to the name or you have rights to the name, because as a DBA you don't have rights to it, but you don't really want to build your brand and build your reputation and build your name only to find out that somebody else is using it, or that it could be confusing for your potential clients.
But if you trademark it, you can use it only yourself. Nobody else is using it.
Right, and unfortunately, Polly's not here today. She's our trademark expert, and she would have spoken about that. But yes, if you trademark your name, then that's for you. A sole proprietor can hire as many employees as a sole proprietor wants to. It doesn't change the business. It doesn't change the nature of the sole proprietorship. But since the business itself, the sole proprietorship, is the business, the sole proprietor is not an employee of the business. So there are some advantages and some disadvantages to a sole proprietorship. The most obvious advantage is that it's just so easy. A person, like I said, sets up shop and that's it. You're a business. The business doesn't have to file a separate income tax form. You just total up your expenses, your receipts, your business expenses on a Schedule C, attach it to your personal 1040, and profit is added to any other income, and taxes are paid at your personal income tax rate. Losses can offset other income, including your spouse's income, if you file a joint return. There's no corporate formalities like I spoke about. The owner of the sole proprietorship, the one person, has sole control over all the business and makes all the decisions. So those are some advantages. And the glaring and enormous disadvantage of the sole proprietorship is the fact that the owner and the business are the same, and that there's no limited liability. The owner is personally liable for all the business's debts. So if there's an accident or if there's something that goes wrong in the practice, the owner, the sole proprietor, is personally liable for that. Any judgment against the business or the sole proprietor is a judgment against the sole proprietor, and any of their personal assets can be attached. And since California is a community property state as well, the assets of the spouse can be attached. So that's something that's a really big disadvantage and is a real concern for a lot of small business owners. Another big disadvantage of a sole proprietorship, without estate planning and proper planning, the business dies when the owner dies. And that's different in a corporation, and I'll get into that in a little bit. So if the business has a value, a going value, it's lost when the sole proprietor dies. Usually, most people choose not to do business as a sole proprietor once they've heard the advantages of a limited liability entity. There are a lot of sole proprietorships, but again, once people hear about the advantages and disadvantages, they usually choose to have some sort of structure to limit their liability. So there are different entities to limit liability, and the first I'm going to start with is a corporation. A corporation is created under the laws of the state of California. Every state has their own laws, but we're going to focus on California. A corporation can do business in more than one state, but its state of incorporation is only one state. It's a separate legal entity from the business owner. The corporation has legal rights and responsibilities separate and apart from the owner or owners of the corporation. The formation of the corporation itself is fairly simple. You submit articles of incorporation to the Secretary of State. It's a simple form. It contains the corporation's name, the name for the agent of service of process, the corporate purpose, the number of authorized shares. And it's a pretty easily accessible form. The articles are signed by the incorporator. May or may not be an owner. In my case, if I incorporate a new client, it's me who signs it. And because it's a separate legal person, it exists perpetually. So even once the owner or owners of the corporation have died, the corporation itself exists in perpetuity. Owners of a corporation are called shareholders. Prospective shareholders exchange money, property, or both for the corporation's stock. Policies of the corporation are determined by the board of directors. There are officers in a corporation, president, secretary, treasurer, and they carry out the corporate policies and conduct the day-to-day administration of the business. But one person can do all of this. One person can be the director and officers and everything. So corporations can be owned and run by just one person. When a corporation is formed, it's classified as either a C Corp or an S Corp. All corporations start out as a C Corp. And then a subchapter S is an election, a form that's filed. And it's an election that's made by the shareholders. And all it does, it confers a special tax status on the corporation, allowing the corporation to be a pass-through. And what that means is that profits and losses of the corporation pass through the corporate entity to the shareholders in proportion to the shareholders' ownership percentage. So what that really just basically means, to make things simple, if there's two people that are each 50% shareholders and they elect to have a subchapter S election, the money that's created from that corporation passes through the corporation to them as individuals. So the profits are not taxed at the entity level. They're only taxed at the personal level. Okay? And this is an advantage to some over a C Corp because it avoids the possible double taxation of tax at an entity level as well as at the individual level. A lot of times, small business owners seek to incorporate as an S election to gain these benefits. of the pass-through taxation. The individual shareholders report their earnings on their individual income tax returns on a Schedule E. The S corporation still has to file a corporate tax return, but like I said, they don't pay taxes at the corporate level. They receive a Form K-1 that reflects their share of business income, deduction, and other tax items that have to be reported on their individual tax returns. But since the profits of the corporation are passed through to the individuals, taxes are passed through corporate profits at the individual tax rate. And if the corporation reports a loss, then the individual reports that loss as well, and the loss is passed through. The C corporation is not a pass-through entity. The C corporation reports its own profits and losses and pays its own taxes. C corporation profits are distributed to shareholders as dividends. And I'm not going to get into retained earnings and stockholder equity because that's just a little bit too involved for kind of a brief overview. But basically, like I said before, the double taxation occurs because the net profit of the corporation occurs at the corporate level, and then there's also a tax that occurs at the individual shareholder at the dividend tax rates. So C corporations and S corporations are taxed differently, but they do share many purely legal qualities. The advantage of limited liability protection. That's a major advantage of incorporating. This way, shareholders, owners, are typically not personally responsible and liable for business debts. Both S corps and C corps are separate legal entities from the owners. Myself, my law practice, I am a professional corporation, but I'm also an S corporation. I have made the S election. The S election simply allows me to pass through the taxation that I was explaining before to the individual. So yes, it is a corporation. It's a professional corporation. And the difference between a professional corporation and a regular corporation is that all the shareholders have to be of that profession. So I couldn't have a shareholder in my law firm who's not a lawyer. And likewise, in your professional corporation, you couldn't have a shareholder who's not a licensed acupuncturist. For the purpose of discussing liability, it's still all the same. The limit of liability is still the same because the corporation and the corporate structure still serves to protect the members from the liabilities and the debts of the corporation. Now, I think what you were asking was how limited is the liability and what if other things happen? And
where's the malpractice insurance? Like, there's obviously that coverage of liability. But if that were to break down for whatever reason, how is the
right? And of course, there's never ever any black and white answers in law. I can't tell you 100% of the time there's never going to be personal liability in your practice. I can tell you that most of the time liability is limited because of these corporate structures, but there are certain times when people can attempt to reach a shareholder personally. Some of those examples include piercing the corporate veil, which is just a fancy way of saying not keeping up with corporate formalities, or intentional acts. If you go and rob a bank,
Don't do that.
yeah, please. Yeah, Miranda will tell you that. But in those instances, your corporate entity structure probably won't limit your personal liability. So back to the S Corp. The S Corp's favorable tax treatment does come with certain trade-off and certain limitations. The S Corporation structure does not allow for more than 100 shareholders. That may or may not be of a concern to people, but most small business owners, that's not a problem. The shareholders can only be individuals. It can only have one class of stock. It can't have more than one class of stock. Can't be a bank or any other institution that uses reverse accounting method. And it has to adopt to certain tax years. Okay. So an LLC LLC it means a limited liability company. It's a relatively new type of entity choice. It provides a business form which kind of combines the corporate type of limited liability with the favorable tax treatment. But it doesn't require all of the corporate formalities. The LLC is purely a creature of state law. The IRS doesn't recognize the LLC as a separate legal entity for tax purposes. The four main reasons behind the popularity of an LLC, the first one obviously is the limited liability. The limited liability is just like that of the limited liability of a corporation, meaning the whole purpose of it is to protect the individual owner's assets. Owners of an LLC are called members. They're not called shareholders. There's no stock in an LLC. The members can enjoy the same pass-through taxation. The profits and losses pass through the business and taxed on the individual members' tax returns. There's management flexibility in an LLC. A member owner can be an individual, it can be a partnership, or it can be a corporation. Each owner or investor has a percentage interest in the LLC, which helps determine how to split up profits and losses and divide voting rights. Profit and loss distribution is something that is different in an LLC than it is in a corporation. LLC owners can decide amongst themselves how to distribute profits and losses. They're not required to divide the profits equally according to ownership interest, which they are in an S corporation, or in a corporation, profits and losses are distributed according to shares of stock held. So an LLC can decide that even though you've invested a bunch of money, we're only going to distribute a certain amount of profits to you, or vice versa. That's an advantage an LLC has over an S corporation. Yeah, I spend a significant amount of time in my practice talking to entrepreneurs and new business owners venturing out, and it is something that we discuss a lot. They want to know, is this right for me? What's the right choice for me? And it's kind of a process for each business owner to go through and ask themselves, what is the nature of my business? And what are the tax ramifications if I incorporate or if I don't incorporate? And what are the liability ramifications if I incorporate or don't incorporate? I mean, those are the two main concerns of business owners, tax and liability. So if you think to yourself that you would want to have the benefits of the pass-through taxation, that your business is such that it's going to generate a certain amount of profit, and you want the profit to be passed through to you on the individual level, taxed at the individual rate, and in an S corporation, you can take what's considered a reasonable salary and pay yourself that reasonable salary. And I don't know what a reasonable salary would be considered in your industry, but just for conversation's sake, you take your reasonable salary at your individual tax rate, and then the remainder of your profits is taxed at a dividend, which is a better tax rate. So that's the advantage of the pass-through income.
Can I ask a quick question? What is the cost to do an LLC, and is there a yearly fee that you have to reapply or anything?
Yes, there are. The cost to form an entity, it varies. I know that there are online resources that are able to incorporate or form LLCs for low cost. I'm not sure exactly what their rates are. An attorney to do it is going to be about $1,000. And yes, there are yearly fees. The corporation has an $800 minimum per year, and the LLC it has an LLC fee, which is taxed, it's not a tax, it's a fee, but for all intents and purposes, it is a tax, and it's based on the LLC's gross profits, not net.
So is that something like you would, and the benefit of not doing it online is almost like getting the how-to and kind of having all these questions answered, because it's like a ton of information.
Yeah.
It's like, I'm not really sure. So who are the people besides like talking to an attorney and maybe a tax person? Would you say that those are the people you should really speak with when figuring out whether or not it's right for you?
I really advise my new business clients to have a core group of professionals, which include an attorney, an accountant, a bookkeeper, and a banker. Those are really important players in a new business, and I really prefer to know who they're working with, so I can have conversations with all those professionals and we can all be on the same page, because another benefit that an attorney, a real live attorney, is able to offer you rather than some online service is the benefit of future planning. It's so important to start out your business with an idea of where you want your business to be 5 years from now, 10 years from now. If you want your business to be, a practice that you're going to maintain, or if you want it to be a practice that you plan on selling, those might have different strategies and plans. And so that's nothing that is going to be factored into simply incorporating a business online or filing articles of organization for an LLC online.